NVIDIA posted a record $81.6 billion quarter, and the stock sold off anyway. The custom silicon rotation just got real, with Qualcomm and Microsoft both circling NVIDIA's moat. Let's get into it. NVIDIA delivered fiscal Q1 revenue of $81.6 billion, up 85% year-over-year, with data center clocking a record $75.2 billion, up 92%. Non-GAAP gross margin held at 75%, EPS at $1.87, and the stock sold off anyway. This is the classic good print, tired tape reaction in a name that has carried the index for 2 years. Hyperscalers still account for roughly half of data center revenue, and the street flagged sequential deceleration. The bear case sits right on the calendar. Rubin systems begin shipping in the second half from AWS, Google, Microsoft, and Oracle, setting up an even harder compare for Toyota. That's exactly the wall Qualcomm and Microsoft's Maia silicon are now pricing against. Management is voting capital return, an additional $80 billion buyback, and a dividend hike from 1 cent to 25. The question is whether buybacks can outrun the compression narrative the rest of the industry is engineering. Qualcomm spiked as much as 8.3% intraday Wednesday, a fresh all-time high, on a Bloomberg report that ByteDance has signed on as one of the first marquee customers for Qualcomm's AI-focused ASICs, with millions of chips expected to ship into TikTok parents' agent infrastructure. Qualcomm provides manufacturing services for a ByteDance-designed chip, structured to sit just under U.S. export control performance thresholds. This is the deal that reframes Qualcomm as the credible third leg of the AI chip trade beyond NVIDIA and AMD, and it lands the same week NVIDIA's print sold off. The bear case. This is a manufacturing services deal on someone else's silicon, with revenue concentrated on a single Chinese customer whose export control window can close overnight. The forward signal. Watch the next Qualcomm earnings for a discrete data center segment line. If it appears, that's the moment the multiple re-rates. Anthropic is in early-stage talks with Microsoft to rent Azure capacity powered by Maia 200, Microsoft's custom AI accelerator, for Claude inference workloads. If signed, this would be the first external validation of Microsoft's 2-year custom silicon program. Maia 200 launched in January on TSMC 3 nanometer, with Microsoft claiming over 30% better tokens per dollar versus its prior fleet. The deal would make Anthropic's silicon stack unprecedented. Trainium on AWS, TPU on Google, Maia on Azure, plus NVIDIA, explicitly designed so no single vendor controls Claude's cost curve. The bear case. These are talks, not a contract, and Maia inference quality is unproven at Claude scale. The forward signal connects directly to our top story. Every non-NVIDIA inference deployment compresses NVIDIA's long-term pricing power. Watch Microsoft's Azure commentary next quarter. If Maia gets a Claude name drop on that call, the inference margin leg of the NVIDIA thesis breaks. At Google I/O on May 19th, the company launched Gemini 3.5 Flash, beating its own 3.1 Pro on coding, agentic, and multimodal benchmarks, while running 4 times faster on output tokens per second. Google also unveiled Gemini Spark, a general-purpose agent that takes actions across connected apps on the user's behalf. Flash hit general availability the same day across Google Anti-Gravity, AI Studio, and Android Studio. This is Google's clearest answer yet to ChatGPT's consumer dominance, and it positions Gemini as the agentic layer for Workspace and Android. The bear case. Agent demos historically don't translate into sustained daily active users, and Gemini consumer share still trails ChatGPT by a wide margin. The forward signal. Gemini 3.5 Pro is in testing with general availability scheduled for next month. That's the leaderboard story heading into June, and it's the print that determines whether Google has closed the model gap or merely narrowed it. OpenAI rolled out GPT 5.5 Instant as the new default across ChatGPT, with safe response performance improving 52% on harm to others cases and 39% on self-harm. The company also pushed financial features to US Pro users and made ChatGPT for Excel and Google Sheets globally available, a direct shot at Microsoft 365 Copilot's core workflow. The integration handles formulas, multi-tab files, and scenario modeling, the exact territory Copilot has owned. This lands alongside a reported $122 billion raise at an $852 billion valuation, reinforcing the moat thesis ahead of any IPO window. The bear case is loud. A CNBC piece this week argues commoditization of open-weight models compresses frontier lab margins faster than public markets can absorb, with revenue per token falling faster than enterprise seats can rise. The forward signal: watch ChatGPT enterprise seat disclosures over the next 2 quarters. If Excel and Sheets adoption drives measurable seat expansion, the IPO window holds. If not, the cheap AI thesis wins, and the $852 billion mark looks fragile. The through line today: the AI chip monoculture is cracking, and every custom silicon win compresses NVIDIA's pricing power one notch further. Microsoft's Azure call next quarter is the one to watch. I'm Ted. This has been the Daily Alpha. Subscribe to stay ahead of the tape.